Welcome to the Modern Marketing Loan Officer Podcast, brought to you by the Shining Star Hero Home Buying Program. Each week, successful loan officers share their experiences so that you can grow your mortgage business. Here's your host, Enrique Braunschweiger.
Hey everybody, how are you? Enrique here with First West Financial, and I want to welcome everybody to another episode of the Modern Marketing Loan Officer Podcast, sponsored by the Shining Star Hero Program. And today, this is a day that has been circling my calendar for quite a while. Since I had an opportunity to book this, I have been looking forward to, because this is a person that I look up to. I have been following this person for a long time. I've been in business for a while, and it's been a treat to know that he's going to be with us today. We're going to spend about 30 minutes together. We're going to talk about all things marketing. Helmer, the legend, is right here with us today. Helmer, how are you?
Thank you, my friend. How do I live up to an intro like that? Well, man alive, I appreciate that. Thank you so much.
Absolutely, man. I mean, you've really earned it. You know, you spend so much time giving and being involved with originators, with brokers, with anybody that is involved in our industry, that follows you, that knows who you are, what you do, knows that you come from such a good place. So it's just a great treat to have you here today, Helmer. But there may be some people listening that don't know who you are. Tell us a little bit about yourself, about what you do, and a little bit of your background.
Okay, just a real quick version so we can get to the good stuff. I've been in the business for about 22 years. I was an originator for a little over a decade. I was an executive for about 5 years, and a little over 6 years ago, I started Originator Success, where I could best put my efforts in helping originators to go out there and get more loans, get more business. That's what I'm always the most passionate about. I find it to be a lot more fun than the compliance stuff that I had to do and all that stuff. So I'd much rather help you guys get loans and get business, and that's what we focus on today.
Absolutely. Well, that is a great background. Now, of course, you are a modest man. You obviously know a lot about our industry. You are really an expert when it comes to rates and the bond market. And, you know, you give a lot of us really an edge every single morning when we look at your stuff. You're always keeping us updated. So we really appreciate that. But you obviously understand the mortgage business as well as any originator out there. You have your finger on the pulse of mortgages, and we really appreciate that. So part of the reason why I invited you, and for those of you who have never heard the podcast, we focus on marketing, right? We want to focus every single episode that we have. We focus on a very specific piece of marketing. So we've had experts on video, we had experts on email marketing, we've had people that specialize in YouTube, and the purpose is that they come into this podcast and just very unselfishly give information and tips and advice to the loan officer out there. The reason I started this podcast is because, from my own experience, when I started in the mortgage business, of course, I had to learn about loans. But when I didn't realize until a month later is that, oh my, I got to know about accounting. I got to know about marketing. I got to know about how to put myself out there. And then when social media came, well, now I need to know about video, and I need to know about Facebook. And I guess the next thing for me is I'm learning about TikTok and so on, right? So the business requires that we get better. Now, when you started, we were on our own, right, Helmer? Now we have a lot of resources, and there's a great opportunity to learn. So today we want to talk about two things that you are very passionate about. One of them is going to be how we market as loan officers, and how we tie the relationship of rates and bond markets and all that information. There's a lot of people doing a lot of different things, and many people are doing it wrong. And we want to talk a little bit about how to use that data that you provide, or that Barry provides, or some of the other gurus provide. How do we use that to market? And then the second, I want to talk about reviews. I want to talk about ratings and reviews, Google reviews, and so on. I know you're an expert on that, and I know that those are things that a lot of our originators take for granted. So you ready to get started?
Absolutely. Let's go.
Perfect. All right. So we know that you know a lot about rates, and that we know that a lot of us follow your advice. How did you get into the learning of the intricacies of the rates and all that good stuff?
So as an originator back in the day, when we would use dinosaur bones to draw 1003s, because I was doing loans that long ago, I used rates a lot and the market a lot to use it as a framing tool so I could separate myself from my competition. However, I didn't like to do it in a way that used a lot of jargon. So I would try to take what was a complex communication, talking about mortgage-backed securities and how this was playing into mortgage rates. And I tried to make it something easy that my consumers could understand, but that they knew that I was an expert and that I could help them, that working with me was going to give them an advantage or a leg up than working with a local bank or with some other lenders. So that was how I first got into using it myself. And because of that, I was actually approached by a guy named Tim Kearns back in the day to help start ratealert.com. And that was where I really learned to go deeper on what was, going on with mortgage-backed securities and how, again, also how to best use that to share with real estate agents and build relationships, how to share that with consumers and grab the deal, especially in an environment we're in like right now, where we've seen rates jump and rates will probably creep up. Having the ability to have that conversation can really help you to win business and separate yourself from your competition.
That makes a ton of sense. Now, every single morning I wake up, and you're one of the first people that I see, right? Because I'm here on the West Coast, so I go in and I go on Facebook and I see your stuff, and you start talking about charts, you start talking about some of the indicators and all that. And I've been around long enough to understand most of it, or at least a good portion of it. But I have to be very careful which of that data I'm going to pass along to my partners, to my clients. Do people really care about this outside of the mortgage industry? Is this good information to pass along?
And again, I'm going to share my opinion and my approach to
Of
it.
course.
There's multiple approaches. Sometimes other people, they'll take the advisor approach where they'll use a lot of jargon or they'll share a lot of information, or they may have a clientele base, if you're working with the engineer types that like the deep data. But most consumers, most real estate agents, they want to know the results, but not necessarily how we got there. So they want to know, Enrique, what's going on with rates? Why are rates going up? And, are we going to see them come back down? Because it really comes down to emotion and fear. Nobody wants to be taken advantage of. Nobody wants to miss out. We had these great rates and I'm going to miss out. So the way I like to approach it is I like to kind of tell everybody, this is what we think is going to happen. And this is what's been happening, but we don't necessarily have to go too deep into the whys. In other words, today we had a consumer confidence reading and we've got some housing reports and we've got a 5-year treasury auction. None of that is going to mean anything to a real estate agent or to most consumers out there. What they really want to know is, hey, what's going to go on with interest rates? So one of the things that we do, above my head, I've got the logo for Originator Success. And what we do is we help originators get loans from Google, social media, and from their database. And one of the ways that we do that is we do what's called a weekly rate forecast. And it's just a short piece. In fact, I limit myself to 1,300 characters or less when I write this piece. Meaning that it's got to be very, very short. And we do just a short paragraph on what happened last week. So for example, right now I would say, last week rates went up slightly and, a little bit about why they went up. And then what do we think is going to happen this week? And when we talk about when the time of this being recorded is right at the Fed meeting. So the Fed meeting is tomorrow, and we're going to get the Fed policy statement, and we're going to have Fed Chair Jerome Powell's press conference. Now, if I'm talking to you, Enrique, as an originator, I like to go deeper and help you to understand. And of course you do, but for other newer originators or people maybe not as familiar, we want to go deeper and understand why the things are happening. But for our consumers, for our agents, our prospects, it's just important that we let them know, hey, this is going to be a time of volatility. We could see interest rates actually move a little bit this week. Pricing definitely could move. And I like to break down for consumers the difference between the interest rate and pricing, meaning, I explain to them rebate pricing is either what they're paying to get a lower rate or what, credits they may receive towards the rate that they've picked. And then say to them, hey, in a time like this, we're going to see some movement based on what the markets are doing, based on what the Fed is going to do. And you just I like to keep it a little more high level and just have that conversation and warn them that we're going to see some movement and rather than going deep into what in particular is going to happen.
Absolutely. I think that's a big part of it, is that because we are in the thick of things, because we think about rates constantly, right? All throughout my day, I'm thinking about rates. One of the things that I forget is that the person that I'm dealing with, whether it's a realtor or whether it's a buyer or a borrower doing a refi, they probably think about mortgage rates for 1 minute a day, where I'm thinking about mortgage rates like 9 hours a day, right? And because Absolutely. I think about it 9 hours a day, I forget that my people are not thinking about this. What they want is they want to be educated. Hey, is this a good time to lock? Should we wait? What's the outlook, right? And how is it going to affect the real estate market? And I think that that's super important to be able to market properly. I saw somebody the other day, no disrespect, but they spend 20 minutes talking about the charts and the candlesticks and and they're using all this Fibonacci talk. And I'm sitting there thinking, I'm thinking the average realtor probably is not really interested in this,
Yeah.
And certainly
and I agree. Yeah.
most borrowers are not. So we have to be careful. We want to be able to deliver information and use it to our advantage. But on the other hand, though, we do want to sound like an authority, right? We wanted people to understand that we know the business and that we have knowledge in terms of what the market is doing.
Right. But you know what? I'll tell you one thing I love everything you said about that, Enrique. I agree 100%. But when it comes to being the professional, sometimes the best way to show you're a professional is by not showing it at all. In other words, you don't have to go overboard talking about all of these deep jargon, technicals, and different patterns for people to take you seriously. Sometimes they're already just going to take you seriously. We're going to talk about reviews, and that in and of itself, they've already done their homework. They see about how positive you've been for all these other people. That in of itself says, okay, we've taken care of that. Just tell me what I need to do. I don't need you to prove to me all these different things that I don't want you to, do you really want the mechanic to come in and start telling you everything about the engine, or do you just
Not
want
at
him to
all.
change your oil, right? You just want him to change your oil. Now, I took some notes because you gave me some great, topics before the call. And one of the things I have down here is don't make it a problem before it's a problem. And you mentioned about looking at rates all the time. So when we look at rates, especially for, I don't want to say newer originators, but originators in the business the last few years, people have become very accustomed to rates being almost stable. We don't see a lot of movement, but I mean, I remember when I was originating actively, we would see rates move a quarter point through a week. And that was normal. We would see rates because back then we didn't give rebate pricing. That was all,
Right.
in our pocket. And before all the regulation changes, when we would price loans, we would just quote a rate. We didn't quote rebate because the rebate was all part of your profit. So you'd say, hey, today I can give you 6.5, and that's where we're at, right? And maybe points if you wanted to buy it down. But let's just say par rate was 6.5, and that meant I was making X, Y, Z. Well, tomorrow 6.5 became 6 3/8 or 6 5/8,
Correct.
and that was normal. We had rate movement, whereas now 6.5, and then tomorrow today we quoted 6.5, and I can give you a 0.5 point credit. And tomorrow we're quoting 6.5, but it's gonna, but I can't give you any credit. So that has changed the way that originators think about rates, and they're constantly monitoring this. And when we see any kind of rate movement, we get nervous. Like I talk to originators, and they're like, oh, the rate went up 1/8 of a point. And I'm like, what's 1/8 of a point on a rate?
Customer doesn't necessarily feel that. I mean,
No.
unless you have a very special character that is shopping around, calling 6, 7 different banks. I had one of those calls yesterday.
Oh, yeah,
He wanted to know
absolutely.
if I could do an 8 better, right? And I said, well, I don't even have your application. And by the time you fill out that application, that 8's either going to be up or down. So
do you want a quick tip? I'm sorry to interrupt you, but
go ahead.
So here's a quick tip. When you have somebody that's a rate shopper, the way that I always love to deal with those real heavy rate shoppers is Enrique would call and he'd say, what's your rate today? And I say, well, my rate could range anywhere from 3 5/8 to 3 3/4 or 3 7/8. And however, it's not today's rate that you have to worry about, Enrique. It's tomorrow's rate or the rate next week, or even a couple of weeks from now, depending on when you find a house.
Correct.
Rather than tell you about what rates I have today, can I tell you a little bit about how I monitor the rates to help you make sure that you're getting a great rate when you're ready to close your transaction or lock in an interest rate? And I move that conversation instead of me being something that they can nail down and compare, right? If I say, okay, this is a purple can, and for those that are listening, I've got 2 cans in my hand. I've got 2 cans of seltzer. So one's a purple can and one's a green can. I say, okay, this is a purple can. This is a green can. It's easy to compare those right now, apples to apples. But what I really want to do with that consumer is I want them to start to begin to trust me. And again, this we could also talk about when we talk about reviews. I want them to start to trust me. And the easiest way to do that is to remove that apples to apples, comparison and make it something in the future. make it something that I'm going to handle then. So I say, hey, this is the rate that you're looking at today, and today I could probably do that rate, but you're not ready to lock that rate today. Let me show you why I can help you to make sure you're getting a low rate in the future. Let me show you how I've helped other people. Check out my reviews, how I've helped them to get a low rate when they're ready.
Absolutely. I can tell you that, especially because there's a lot of brokers listening to this, a lot of brokers listen to this podcast. And one of the things that we forget as brokers is that when a person calls and says, hey, can you give me a quote, or can you give me an idea what your rates are? One of the very first things that I establish is that I don't have a rate. I have access to pretty much any rate in the country. And I actually have access to the best rates out there. I shop around for them. That's even more important than the rate, because what that does is it allows people to go, oh, wow. And then I tell them, instead of you making phone calls and running credit 6 or 7 or 8 times, let me do that for you. Let me shop for you, and then I will deliver to you the best available rate based on the type of program that you have. The second thing that you said is important is not create a problem. Just because we know the rates are a quarter higher or whatever than last week doesn't mean we have to telegraph that to everybody we talk to, right?
Right, exactly.
All this week and part of last week, I quoted rates every day. I quoted them with a straight face. I was excited to talk to people. I had zero pushback from anyone, right? Nobody called me and said, well, wait a minute. Last summer, the rates were a lot better. No one said that, because most people are not necessarily following what is happening with the market. Most people don't care about rates until they're ready to shop for a rate.
Exactly. Just like cars. I always say to everybody, you know when you notice a car commercial? When you're in the market for a car.
When you're in the market for a car.
Otherwise, when they're on during the football game, you're thinking about
even care.
Doritos and buffalo wings. You're not thinking about that new car up on the screen. And you're so right. And it's all about perspective. And the real problem, you want to deal with the real problem. The real problem isn't the rate. The real problem is the emotion and the fear of missing out, or the fear of being taken advantage of. Getting a mortgage for most people is like that experience of buying a car or buying jewelry. For years, I would buy my wife jewelry, and I had one jeweler, and I trusted this jeweler, and no matter what price they came up with, I paid that price because I was comfortable with that jeweler. And then I moved, and now I'm down here in North Carolina, and I don't have that jeweler. And it's like, where do I go to get a good price? Because what am I going to do? Look up the price of gold every day and try to figure out how much is in that ring or those earrings? Or it's really the emotion. The emotion isn't what I can afford. I can afford jewelry. I just don't want to overpay. I don't want to be taken advantage of. I don't want to be, feel stupid over this. And that's what consumers are doing.
Making a mistake is really what it is.
And as long as you recognize that, you can affirm to them, say, instead of saying, hey, oh, it's too bad you locked in today and not 2 weeks ago when rates were lower, you can point out, hey, you are getting a fantastic rate compared to a year or two ago. Or, man, I'll tell you, pre-pandemic, I remember doing loans where we were closing rates in the 5s. I can't believe you're getting 3.875.
Absolutely. It's all in the delivery, right?
It's the delivery and the perspective. Absolutely. And it's kind of, we carry our own head trash, and we feel that consumers are going to push back on that rate. And if you have a consumer that does push back on you, one of the things I used to like to do is I used to like to reduce it to the ridiculous. So instead of saying to them, well, over the life of the loan, you're this, that, the other thing, I might look at it and go, so we're looking at this home price. We're going, we're basically talking about your payment went up $25 a month. So let's take a look at what you're going to have to cut out in order to afford the $25 a month. Do you drink coffee? Should we maybe take out coffees? And they kind of laugh a little bit, and they get it.
It's ridiculous, right?
Nobody wants to pay the $25, but at the same point, if the $25 is going to stop you from owning a home, you didn't belong owning a home yet to begin with. You're not ready.
I always share with my loan officers how unimportant rate can be, is that you can go to most people and ask them what rate they have on their home, and they don't know.
Yeah.
So it's like, it was important the day they locked it. They signed the loan papers of the house, and then you ask them 3-4 months, I say, hey, what's your interest rate? You go, I don't know, 3 something.
Exactly.
That's what people say. So it's not really that big of a deal. All right. I have about another 10 minutes that I want to spend talking about something that I consider even more important than any of the other podcasts that I recorded. And Carl White talks always about the low-hanging fruit, right? And this is one of those things where we go after stuff that does, like we see people buying Zillow leads and doing all kinds of crazy things and putting billboards on the side of the road. And yet you go on Google, you type their name, and there are 0 reviews, nothing. This is the low-hanging fruit. I've known people who have done 400 loans in their lifetime, and they have 4 reviews online. And it absolutely drives me bananas, because I can tell you, I get paid every single week from the reviews that are online, because I get customers that go Google me and I show up at the top, and it's phenomenal. And I know that you're very passionate about it. Tell us, for the person that, I mean, obviously you have a company that does this for people, but for the average person that may not necessarily be ready to hire you to do the job for them, why are reviews so important? Tell us a little bit about the dynamics. I want to give you the microphone for a few minutes to share about what do people need to do to get these doggone reviews online. And of course, obviously you're there, but if they don't want to do that, why even try something? Do something, right?
Right. So, okay. So everybody wants to grab a pencil and paper and take some notes on this section. I'm just going to kind of throw up on everybody. We're going to throw as much in here in the next 5 minutes as we can. So the first thing is the why. Why do you want to get Google, or why do you want to get reviews online? You want to get them for new traffic, people that are going to go on Google and find you. And Google is, of course, the number one place where people are going to find you. And it's the number one place that you want to have reviews. 59% of the people out there go to Google looking for reviews. Now, the new traffic, that organic traffic, you say, oh, Helmer, nobody's going to really go online and find me. And there was a time I used to believe that too. What changed was cell phones, and cell phones changed consumer behavior, and it changed Google. So Google has gone to a local model. And in fact, Google, it used to be called Google My Business till just recently. Now they call it Google Business Profile. And you say, okay,
Correct.
That's just a silly name change. It's not a silly name change. It shows you where Google is going with all of this, because Google started out as Google Plus, and then Google My Places, and then Google My Business. And so they've moved in this direction, because what they really want is they want the consumer to go to Google to find everything, and they want to keep the interaction on Google. So you want to start by having a Google Business Profile. They're easy to set up. They're absolutely free. And that's where you want to try to get the most reviews, is Google reviews. I don't encourage people getting Zillow reviews anymore unless you're buying long-form Zillow leads. It does factor into their equation on the leads you get in that case. Otherwise, Zillow is your competitor now. They're not going to help you. In fact,
They're not your friend. Yeah.
No, they're not your friend. Anybody that goes to Zillow looking for a loan officer is going to get turned into a long-form lead sold. Whereas Google doesn't do that and has no intention or plans of doing that at this time. So you want to make sure you're getting your reviews on Google. And the key to that is having that Google Business Profile set up. The second place, by the way, is Facebook. We find a lot of our originators get reviews from Facebook. Get loans from Facebook because of their Facebook reviews, because you have a search crowd and a social crowd. So your search crowd is going to end up on Google. You want your reviews to be front and center on that Google Business Profile. The best way to do that is to ask people to do that. You want to make sure that you're also not just asking consumers. You want to ask your real estate agents on the deal. You want to ask the title company on the deal. And in fact, you can go to the listing agent on a purchase, and you could say, let's say Enrique was the listing agent. I say, Enrique, things went so smoothly with this transaction. Your people seemed really excited and really happy about your services. Where can I go ahead and leave you a review? And then Enrique tells me that where I can leave him a review. And most of the time, Enrique, the agents are going to say, where can I leave you a review? And if they don't, you give them a little kick in the leg and you say, by the way, would you mind if I go ahead and ask you to leave me a review? And they'll say, oh yeah, okay, no problem. And that opens the door for you to now maintain that relationship with that agent. And you want to stay in touch with that agent. So for example, we have an agent drip marketing piece that we do every week. You can do anything, but once you've asked and opened the door with the listing agent, now you want to stay in front of them, friend them on Facebook and Instagram, and follow them on Instagram, and make sure that you stay in front of them, because in 2, 3, 4 months, that's where you'll get another deal. So using the review technique to build a relationship is also something you can do. But on the actual reviews, you want to keep it really simple, and you want to try to encourage the people that leave you a review. Don't give them a script. In our experience, if you gave them an actual sample, they would cut and paste it. What we do though is we ask them a few questions, because we want them to use particular words in their answers, because Google search uses reviews as part of the search algorithm. So if you have words in your Google reviews, it's going to help you to rank higher. So sometimes, and the best way to do that is ask them, say, hey, by the way, if you need some ideas of what you can talk about in your review, you could talk about how did we help you to get a low rate, because they'll say those words, low rate. And
Right.
How did we help you to get a mortgage in Kennesaw or Kentucky or Vermont or whatever? Use those words in that town. That'll actually help you as well. And then some of the other things that we put in there is, were you happy with the service of the experience? Did everything close on time? And these are things we want them to talk about in their review. And we found online reviews. I mean, we've got hundreds of originators and that use our services and our members, and we get constant testimonials ourselves from people that say, hey, I got a loan from Google. I got a call from Google. And these aren't rate shoppers. These are people that, because of these reviews, they're intention based. They are all ready to go. So they're not going to call you and say, hey, what's your rate? Hey, what's your rate? They're more like, hey, I found you, Enrique. I found you on Google. I read your reviews. And I'm looking to get a house. I was hoping you could help me to get a mortgage.
Every single week. Every single week I get that phone call.
They're really easy to work with, these people. And most of the time, they're going to be much better credit and loan qualifications than your normal, Facebook ads or Google ads, because these are intention-based people that are ready and moving for that transaction. And when they find you, it's important that your website makes it easy for people to contact you, not just to take an online application, but use Facebook Messenger chat as a widget on your website.
On your page.
Yeah, a lot of people, they're going to find you on Facebook or on Google rather, and they're going to end up on your website. And the website, you don't want just a contact us form. Contact us forms, in our experience, don't convert very well. You want to have an email link that when they click on it, it actually opens their email, and you can actually very easily put a subject line and a body. If you Google this, you guys can find out how to do it, or you can have a web person do it. And we use a pre-populated email that says, hey, I was on your website. I liked what I saw. I had some questions. And we find that converts like crazy.
Works really, really, really well. Let me jump in really quick. I think that we talked about the low-hanging fruit. I think that not having Google reviews is really a capital sin if you're a loan officer. I personally think that if I go in and you tell me how great you are and how good of a marketer you are, and I go in and I look at your Google page and you don't have reviews, I'm going to be suspicious about really how good or smart you are, because it's an area that if you're successful, you cannot miss it. You cannot miss it. I think that rather than printing business cards or spending money on other things, focus on getting those reviews. Now, obviously, we talked about the fact that you do this for loan originators, but I'll go as far as saying, look, it doesn't matter how you do it. Get Google reviews. Get that profile set up. Get some Google reviews. And then if you want to get better and hire Helmer or do some, great. But please get started with Google reviews yesterday. It's a must have for any originator. Everybody is going online and checking you out, whether you believe it or not. Correct?
And absolutely. And again, not to make this a pitch, but a lot of people, they get held up because they don't know where to start. They don't know what it's going to take. And so use a company like us to help you get set up. It's only a couple of $100, a few $100, and we'll do all the work for you, because I agree with Enrique 100%. It's not hard for you to do, but there's a lot of things that I would love to do that are simple, but I don't know where to start. So therefore I never really get started. Don't let that be.
You can go back and get your people for the last 3, 4, 5 years to get your reviews.
Oh, set
up that page, right?
We have people upload their database going back, like you said, a few years, and we find that we just blow them up right from the beginning to get reviews.
Yeah, so you go from 0 to 40, 50 reviews within a matter of a couple of weeks.
You can easily jump up. And then also the reviews and the online presence matter, because not just for people finding you that don't know you, but if you're out there and you're shaking the trees with real estate agents and they're referring you, those people are usually getting more than one name. Even if the agent only gives your name, which is rare, let's face it, most of the agents are always with that whole 3-card nonsense. But even if an agent only gives your name, the consumer is usually getting a name from a brother or a sister-in-law, or somebody else gave them a name, a neighbor. So what they do is they go online and they compare, they quote unquote research. And that research, that's where you've got to win. And your online presence Google is like your number one referral source. They're the ones that say, yes, you absolutely want to deal with Enrique. Here's why. Because you need to win that battle before you ever have the conversation, because you'll never get the phone call. They're going to deal with the one that they pick who they work with based on what they find online. They don't call around and talk to 3 or 4 people. They talk to one. So you want to be that one. Make sure that you've got a strong online presence. Get those reviews. Google is the number one place. Facebook's a strong second. You want to have all of your reviews so that people can see them easily and they can get you new business. And those are the best places to do that.
The last statement that I'm going to make about this, and then I'm going to give you an opportunity to share one more thing with us. But we are in a culture now where every transaction that we do, most people, every transaction they do is based on reviews. Whether you're purchasing a microphone like this one on Amazon, or whether you're going to a restaurant, or whether you're getting the mobile car wash guy, or whether you're purchasing, everything is now review driven.
Yes.
The one with the most reviews wins. There's no question about it. I market myself as the highest rated loan officer in my community because I am. And I have quite a few reviews, but it surprises me that we have big players here in our town that have 10, 15 reviews. They've been in business for 20 years. They're not making an effort,
Yeah.
And I know that I take business away from them just because I happen to have, 10, 15 times more reviews than they do. So
Absolutely.
It's that simple. Now, really quick, you do a phenomenal job with originators, and you're always helping. A lot of what you do is free. I mean, I can go on Facebook every morning and find out what's going on with the rates. It doesn't cost me a dime, right? I can just go in and do that.
Yep.
But you do have a couple of services. Tell us briefly what you do and how can people get a hold of you to take advantage of your experience and the success you've had with other originators.
Thank you. So let's give everybody the free stuff first. So we do a free daily email about rate lock advice for originators. Anybody can sign up for that at www.ratelockadvice.com, and it's absolutely free. It's not a marketing funnel. You don't get upsells. It's just sign up and get the email. That's all we do with that. We have a text service. It's a whopping $7 a month for anybody that doesn't want to necessarily go deep and learn all the the charts and all that stuff, but they just want to protect their pipeline. Anybody that would like a $7 a month text service, it's www.ratetextalerts.com.
$7. Are you kidding
Yeah,
me?
and just $7. It's just something. Again, we want it to be something easy for everybody. What I usually hear from originators is they like that we don't just send a bunch of numbers of what's going on with the mortgage bonds or with the 10-year treasury. I always give my input and my feedback on here's what's happening, here's what I would lock or float, and here's why. And it's usually about 425 characters. So it's a good size little text. We do it a couple times a day. Plus there's alerts if the market's moving and rate prices are likely.
As a funny side note, I have a conversation with my wife once a month about this. Every month she sits on the couch. She goes, "What is the $7 thing?" Every month. Yeah. I said, "That's the rate alert from Helmer." Oh, okay.
Yeah.
It's like $7. That's phenomenal.
Yep.
What else?
And then the main thing, our main focus, as much as I love helping originators with the rates in the markets, what we do at Originator Success is we help loan originators, brokers, retail, whatever, to get loans from Google and social media. So we do all of the setup for your online branding. We do all of the optimizing if you've been doing it, and we help you to get it out there so you rank higher in Google, get more organic search traffic. We provide you with a website to convert that search traffic into conversations, and then we also post content for you on social media, and we've got some email campaigns, just a few of them, but the ones that are most powerful, just to help you stay in front of real estate agents, prospects, past clients. So it's all turnkey. That's why I get so much great feedback on what we do. Is it's all done for everybody. So I agree with Enrique. There's nothing that you guys can't do on your own. If you want to go out and set up a Google business profile, if you want to set up a Google, a Facebook business page, get reviews on Google, everything you should do. But if there's anything holding you back, you're busy, you don't know where to start, just reach out. We can help you with that again. And we run, just a few $100s a month, no contracts, no setup fees. And we just, again, if anybody wants to sign up for a demo, can check us out at originatorssuccess.com. But even without us, everything that we do on
and if
open
people
book.
already have a lot of that set up, I think that what might be the reluctance is like, man, I already have this and this and this.
Yeah.
You don't necessarily have to change everything people are doing. You can optimize what people are doing. Basically.
Because we, all we work with are mortgage people. I've got 20 years of mortgage industry experience. So we work only with mortgage, and we know what Google is looking for. We know how to get people ranked higher in that market to get the, kind of the same thing that you're getting, Enrique, which is people are finding you, they see your positive reviews, you're out reviewing your competition, and then they contact you and, they turn into loans. It's good business. Plus, this has become, and it's becoming even more important every day, that it's the cost of doing business. You have to be an online brand because all those consumers out there that are getting referred from real estate agents and other sources, they're researching, and that's where they go to check you out and make sure that you're up to snuff. So you need to have that. Even if you're, Helmer, I do all my business by referral. I don't want online leads. These aren't online leads. This is
there's
just
still an
part
opportunity
of
there
online
for
brand.
everybody to take advantage.
Absolutely. So if
everybody wants to find you, all they have to do is type Originator Success on Google. They'll find you, type your name. You're available to have conversations like this with people. So we really appreciate you taking the time to be here with us and to be able to share with loan officers. I want to thank everybody for being here, for listening. And of course, Helmer, thank you so much for your generosity and for sharing with us. And, continue to check out our podcast. We have a couple of people coming up here in the next few days that also have a lot to say about mortgage marketing. And we just love working with people and teaching people and educating people and sharing with people. So thank you again. And thank you to the Shining Star Hero program for sponsoring the podcast. Helmer, thank you.
Thank you for having me. And thank you for what you do, Enrique. Thank you for sharing with the community. We appreciate it.
Absolutely. Have a great day.